So now we're on to time frame correlation. So basically, we have higher time frame and lower time frame. So the higher time frame is the 1 hour and above, right? So the 4 hour daily, weekly, etc. 1 hour is higher time frame. The lower time frame is a 15-minute and below, right? As you guys already know, we do our marking up on the 1 hour time frame. So let's stick on this time frame for now. 1 hour time frame. So we have a low here, high, higher low, higher high. So now all we need is a higher low. So we got the higher low here. We have the higher low here, and then to enter on the when to enter, you need price to be back above this black line, back above that point. Reason being, this is where people sell at in the past, so you need price. Sellers are gonna automatically be here in the present, same. So you need price to be back above that level with the market trending up in the direction that you want to place your trade. All right, so you need price back above this level, and you need price to start making an uptrend on the lower time frame, like let's say the 5 or the 15 in that case. So the blue represent the lower time frame, the black represent higher time frame by the color code right here. Okay, all right, so back down to the 5. Wait, let me just go back up. Yes, so back down to the 5. So on the higher time frame is the black. You would see price just go high, low, higher high, higher low, higher high, higher low. But where you want to focus on is when price come back above that level. You go down on your 5 or your 15, wait until market is back above that black line, and the trend starts, price start to break highs. Because from the beginning, a uptrend is when price is breaking highs, so price is going higher, and a downtrend is when price is breaking low, so price is going lower. So in this case, on the 5 or the 15, you need price to break a high back above that level, right? Because remember, this is the last low here on the higher time frame. So market could even come here, and this here could take hours. So all you do is come here and set your alarm back above that level and just wait until price break a high here on the lower time frame, and then place your stop loss anywhere below the last low and aim for a high. Simple as that, right? And then it's gonna continue happening, and you do the same here. Wait, can I copy this? Yes. And you do the same here. So wait until price is back above that level. Remember, price can come back even to the last low on the higher time frame, but ideally you want to wait until price come back above that level, and you'd enter somewhere here when price is breaking highs on the lower time frame. And remember, the lower the time frame is going to build up in the higher time frame. So the 5 is going to build in the 15, the 15 is going to build in the 1 hour, etc., etc. Right? So all you have to do is just continue doing that until higher low, higher high. Price failed to create a higher high. So you know price start to go down, market start to go down, and you take it back down. Simple. So just work with the alarm, work with structure, and just stick to the higher time frame. Stick to the higher time frame for your analysis, the 1 hour and above. And for entries, you go down to the lower time frame, the 5 5 minute and above. Right? So price has been creating a downtrend here, downtrend here, downtrend here, until this is a lower high. Price failed to create a lower low, so this is the first sign. And then you wouldn't enter yet. Confirmation is when price made a higher high, come back down to make a higher low, and then price is back above that zone. You would enter here on the lower time frame, of course, and then you're gonna aim for the last high where this trend started from in the first place. So you would aim for there. So there you got a big trade there. So yeah, so that's time frame correlation. It's pretty simple. It's not complicated. Trading is not hard. It's not hard. It's just patience, emotions, and discipline get in the way. So this is just pattern recognition, patience, and logics. Yeah, that's it. Um, I wish it. Well, I don't wish it was harder, but that's just how simple it is. So yeah, remember, stick to the higher time frame structure. Wait until price is back above or below that level. Go to the lower time frame. Wait until price break a higher or low in your direction. And the key thing is, wait until like let's do this example here. Let's just go back over here. Let's just say just put this red. Let's just say this is the last red candle here, right? Put this as a green candle. You need that 5 minute green candle to close above, right? The candle has to close, meaning price this can build up, but you need that candle to close above that point there. That's another key thing, is waiting on that candle to close. When that candle close, and why you should wait is because when the candle close, so you have to wait 5 minutes. If you're on the 5 minute, and the 15, you have to wait 15 minutes. When the candle close above that high, that's confirming that price is no longer in a downtrend. In this case here, it's confirming that price is now on an uptrend on the 5 or on the 15. And then if you're on the 5, it's gonna bill into the 15, and then 15 is gonna bill into the 1 hour, etc., etc. So wait until the candle to close above that area, and you're good for entry. All right, so that's it for, yeah, that's pretty much it for that time frame correlation video. Any question, feel free to ask. Catch you in the next one.